number 5, which is financing the gold jewelry sector and bullion banking. So, members of the distinguished audience, we're going to have a panel discussion for the same. First of all, I would like to call all the panelists on the stage. The names are as follows. With a warm round of applause, please welcome Mr. P.N. Prasad, DMD, Precious Metal, SBI. Welcome on the dais, sir. Mr. Nirakar Chand, the CEO, DIL. To join Mr. P.N. Prasad on the dais, please. I'd like to request Mr. Harish Madan, Head of Treasury, ICBC, to please come up on the dais. Mr. Manish Upadhyay, Deputy GM, ICICI Bank, to kindly join our esteemed panel on the dais, please. Mr. Vipin, Raina, President Marketing, MMTC PAMP, to kindly come upon the dais. Mr. Sabyasachi Ray, ED, GJEPC, to kindly join the panel. Now the panel is here. It's time to call the panel moderator on the dais. And it's Ms. Minisha Gupta, Editor Commodities and Currencies, CNBC TV 18. Let's welcome all the panelists and our panel moderator with a round of applause, please. Ms. Manisha Gupta, kindly proceed. Thank you.
Well, an amazing panel, and we are going to talk about financing and bullion banking. These are two very divergent subjects, but we'll take the financing part first. And India, while we keep saying, is the largest or one of the largest gold markets in the world, but there have been some concerns. In the last 2 days, we've seen so many deliberations go on. We've talked about organization, structure, and trust clearly has been one word that almost every panel has spoken about, including the Honorable Minister yesterday. So that is something that we will talk on. We'll also talk on innovations and growth going forward, and what is stopping that, what is curbing it, and what we really need to do from here on. Mr. Prasad, I want to, of course, start with you first. While we have seen the last decade India grow as a jewelry sector, but when we look at the credit numbers, it's a far cry from that. Where are we standing right now? What are the issues as per you? And I'm assuming you've been talking to the sector more often than I do, perhaps. What is the feedback that you have to give to them?
Good afternoon, Manisha. I think this question, we have been answering at least
on various platforms.
Various platforms. I think the basic issues still remain why the credit to this sector has been coming down, and there is not much interest among the banking community to continue extending credit. When we analyze these, analyze the fundamental reasons, basically the earlier also this was been told because the one thing basically the trade, as the bullion trade or the jewelry trade, is mostly conducted on trust. The trust deficit which has happened in the last few years has been one of the reasons which is having this, one of the reasons for the banks to reconsider the extent of credit to the sector. Having said that, in the last 2 years, we have been seeing a different kind of approach. Why I said the different kind of approach is that the Ministry of Commerce has seized of this issue. What they had done is they had formed a coordination committee. In fact, I am heading that coordination committee of the banks to understand what is the problem facing, why banks are reluctant to lend, what we should do. This has been taken up in the last 18 months or so, and we have been regularly meeting. The committee contains representatives from other banks. IBI is also there, GJEPC is also there, industry also is there represented. So finally, what we have done is that we have been now able to arrive at a uniform policy. See, what we had seen earlier was that every bank has got different policies. The different policies that industry was finding it difficult to meet the requirements of different banks. One bank has got a particular range of margins, one bank has got a particular set of security norms, then the bill limit. These are all very essential if you understand this business. These are the fundamental basis on which the business is conducted. So there was no uniform policy available to the community. So we have now arrived at two different uniform policies, one for the gem and jewellery sector, one for the diamond sector. State Bank of India particularly was very active in the diamond sector as well as in the gem and jewellery sector. So we also had this policy earlier. What we had done is, our policy we dovetailed with the requirement of the industry. We had circulated to the Indian Banks Association. The Indian Banks Association in turn has circulated it among its members, and most of these policies have been uniformly adopted. So this is the first step towards the extending more credit to the sector. The second, which is a universal problem, we have been hearing this problem, one is about the valuations. So this has been one of the major issues that lenders have been facing, because how do you value this sector? How do you value it? Because there have been different policies. So this is another area we have been able to make some leeway, and we have created a panel of valuers, existing panel with from the customs and excise departments, plus we have banks' own panels. That is under work in progress, and this will also get reflected. So we are addressing these issues of the lenders particularly. The third what we are doing is that there are requirements of providing, especially for example, the jewellery sector. What we had observed over the last few years is that instead of financing the stocks, mostly this sector requires finance for short-term working capital to pay towards the advance to the suppliers and also to meet their working capital cycle. So there we have been now open to the idea of giving them metal gold loans. It's a self-liquidating product. It has been aligned with the working capital cycle of the business. So whether it is a handmade jewellery, or whether it is a machine-made jewellery, or whether it is for a domestic, or whether it is for the export sector, we have created a policy framework to provide this metal gold loan, which is a self-liquidating in nature, which is aligned with the working capital cycle. And we feel that the mistrust which was created because of the valuation and other things, because Bullion has got a better valuation perspective. So this is the another aspect we have been doing it. So it's not that everything is lost to the sector or everything is been kept under the carpet or thing. We are coming out with policies. It takes some time. It takes some time. But I always have very optimistic, having been associated with the sector for the last 12 years, being worked in the diamond branch when I was also in Antwerp, I see there has been a shrinkage, many banks are exiting, but I'm sure the positive framework what we are trying to create will definitely bring back banks. In fact, in my own bank, earlier 1 or 2 years, we had some restrictions on fresh financing. This year there is no restriction. If there is a business demand, but unfortunately what happens is the diamond sector, the demand or nobody is asking, because again the problem is ICBC. This is a very only a subject which everybody would like to see. We have some problems with ICBC. We have been working with ICBC to create some kind of security structure for the exporters, at least for the MSME customers. It's still yet to be seen the light of the day. So everything is not lost. We are working. We hope that this will be a beginning for the better days to come for the sector.
We hope so too, sir. But Sabyasachi, I want to come to you, and taking on from what Mr. Prasad said, that not all is lost. They are working. It is going to take time. But the question really is, does the industry have that kind of time? Because in the past year or so, we've seen people not expand. They actually have curbed their operations. We've also seen some shutdowns happen as well. So what is that industry is looking at? Another thing that Mr. Prasad said was that while we are ready to give, there are no takers also from the industry. So how would you summarize the overall industry as of now?
Thank you, Manisha. See, if we can summarize, we have at least in our council vertical, there are two very distinct verticals. One is for diamonds and one is for gold jewellery per se. So if I look at, we have worked on for both the verticals basically. So as I think just now you have heard that the coordination committee, making of coordination committee was a huge success, and the coordination committee was formulated in the nick of the time, If you see, I think you are already reporting about other sectors also, the total export sector, the total funds have gone down by more than 50%, the advances what has been given. So in our sector, we could arrest this because of this coordination committee, because we understood there was a trust deficit, there was a lot of knowledge deficit, basically we'll tell it. So we provided that knowledge, we are now regularly sharing that knowledge. Basically, what is the right kind of due diligence, what the bank should do when they are dealing with our members. It is very important because we did the banking summits, we told them repeatedly that these are the types. So, but however, their officers change and their knowledge base goes with that. So based on that, now we have created this forum through which we are sharing that knowledge. I think banks have become confident, and in fact, when they were coming out with this policy, State Bank was the pioneer for this. And then we also sat with our members. Based on that, our concerns were raised, and based on that, the policy which has come out, both for the diamonds and the jewellery, are of course not that averse to a sector. It takes the concerns of both the sides. So that way I can say that okay, in the policy front we are okay. Now let us go to the advances. Now the advances, of course, if the business, the demand is less, we understood that there are some demand crunch for all goods. For us also there is demand crunch. Based on the demand crunch, of course, good companies where they want to give loan, there may be takers, there may be less, and also the cost of funds have gone up. If the cost of funds have gone up, and if our traders have other means, they will try to use those other means. Because of that, these are complex of it is a combination of all the factors based on which there can be some. However, till now we understand that the members, regarding, if I talk about jewellery, gold metal loan is a real challenge, because when you go back to the members, we understand that the gold metal loan, the kitty, what was there of the banks, I'm talking about the domestic market, that has decreased substantially, all the banks, including the state banks. So we are asking the question, but what I understand that the regulatory norms have come up, which is not helping the gold metal, that means advancing of gold metal loans. So that, of course, I am also very curious to know what has happened, because of the advancing of gold metal loans have not been happening that much to our sector. Thank you.
Mr. Prasad, yes.
One thing I just forgot to add, of course, while the committee has been interacting, one great development which I missed to mention is about the creation of the My KYC Bank. See, this is an excellent initiative by the GJEPC, because as lenders, we were also worried about the due diligence on the counterparties, the quality of credit we extend on the customer, but it is again, cash flow has to come from the counterparties. This KYC, My KYC Bank, I think has created a platform by which large number of participants in the trade, you have the access to get their KYCs online. Of course, this is yet to fully take off, because this legal process has been started, that documentation has been started. So that one more worry which was about the credibility of the buyer or the buyer is also being addressed. This is one major development which I missed in the beginnings.
Sure. But do you also want to reply to what Sabyasachi said about gold metal loans, on why the banks are slightly hesitating, or the numbers are not so great on that too?
See, coming back to the metal gold loan, of course, there are not many public sector banks or private sector banks who are showing interest in this bullion trading itself. Of course, this is another area which the government was seized, and there is a working group constituted, and they had come out with a suggestion for creation of a bullion bank. Of course, this is a work in progress. It's a very incipient stage. We need to have a real framework for bullion banking in India. First of all, there are multiple regulations which govern the trade, bullion trade. Then multiple regulations, you need to have at least one uniform regulator. Now Reserve Bank is there. Now DGFT is having this thing. Now BIS is also involved. SEBI is also involved. So these are multiple regulators which are not a very conducive framework for the trade to flourish. There is a need, because it's a thing where there is a need for you having a uniform regulator or a single regulator, whoever can take care of this sector's requirement of bullion banking. Then second, of course, the product also, of course, currently the very primitive products are only being offered by the metal gold loan schemes or some exporters for bullion, and this thing, that is only being offered. We need to have a wide range of products also. Third, of course, is one major problem we will have is the skilled manpower. There are not many people available in India who are capable of having skill in this trade. This is also an acute shortage for skilled people. Of course, you may say that skill will only be developed when you open up the market. So chicken and egg syndrome, so which is needed first. So I think this is why the bullion trade has not flourished, or it has not grown up the way. We consume almost 800 tons of gold every year, and we second only to China in terms of imports. And when you speak of gold imports in the country, it generates the questions about current account deficit and so many other issues, foreign exchange. It's a very, very sensitive topic.
Sir, I totally get that. The industry is going through so many issues, but their hope is that the bankers at least will stand with them, and the cost of funding is something that can be taken care of. Mr. Chand, your initial comments on that, and the cost of funding is not just one thing. Valuations is one thing that Mr. Prasad talked about, and then we are looking at collateral security, insurance, etc. So you name it, and there is a long list